Hi there. This is the story of Molina Healthcare, ticker symbol MOH. This company has been requested by a Titan member who has access to my portfolio. So, this company right now, to tell you short, is undervalued. So it's worth watching this video. The price from this level, yes, has high chances to double, to have a 2x. If you look at the history of the stock price, you see a decline from over $300 to $161 per share. And the market cap is only 8.7 billion. And here is the thing. If you look at their balance sheet, cash plus investments are about $8.4 billion. And just compare market cap to their cash plus investments, you see, wow, the market cap is close to their cash plus investments. Now, let's also look at the revenue. If you look at the revenue over the last 3 years and 9 months of 2025, an increase from 31 billion to 39 billion, and also another increase for 2025. The revenue is expected to grow more than 40 billion. So, in the next 5 years, they might double their revenue. And again, look at the revenue and the market cap. It's a big difference. And on top of this company is a profitable one. Their earnings over last years, 700 million, close to 800 million, 1 billion, 1.1 billion, and then a decline to about 600 million for the first 9 months of 2025. Now, you also look at the number of shares, a decrease from 58 million to 54 million, and they are still doing some buybacks. They have left 500 million for buybacks, and they use another 500 million for buybacks in the third quarter. And this means a dividend yield at the current market cap about 5%. Not dividend yield, but buybacks yield. Now, you have to understand what they do and why the stock price has declined so much and what's next. And by the way, the price to earnings is about 10. Now, they offer health insurance to low-income people and government-sponsored populations. Here is the thing. Their business depends a lot on medical claims. There is a metric you have to watch closely. Medical care ratio, MCR. When this gets higher, over 90%, that will put pressure on their earnings. When it gets below 90%, let's say 85, 89%, this means their earnings will improve in the future. So, can their ratio improve more in the future? Well, that can be possible. There are high chances. You see some fluctuations, but over a longer period, I believe that this ratio can be improved. If you look at their past history, the ratio was lower than 90%, and I think they can do it again. Of course, this also depends on the government policies. Because if you look at the segments, how they make money, they depend on the program called Medicaid. It represents 70 to 80% of the total revenue. And they are exposed to state-level policies. If you have bad policy, they will put pressure on their earnings. And this company, Molina Healthcare, has to adapt to predict the future medical claims so that they can charge more for their premiums, but based also on state-level policies. So they can charge a lot as they want. You also have to respect those policies, at least to make a profit, to survive. And by the way, those claims, their premiums, the policies they write, Molina Healthcare, those are updated every year. After 12 months, policies will be updated. They submit their filings to the state level, federal level, and then they can charge those premiums. And over a longer period, their ratio can improve. Now, the thing about this company, don't expect a rebound next year or this year. Over a longer period, 3 to 5 years, I expect that in the next 3 to 5 years, you can have a double, or even more than this, 3x. So, this is undervalued, can be a good investment. You also have to compare these investments with other companies. That's why Titan members have access to my portfolio where you see the best companies to invest in. And my performance over the last 4 years has been 40% compound annual return, 40%, and that's a great performance. So, from this level, this company has high chances to improve, to grow more in the future and improve their medical care ratio, and also the earnings to grow more in the future. Now, about the cash plus investments, as I said, they have 8.4 billion, but here you have to be careful because the debt is around 3.6 billion and medical claims are about 4.8 billion. By the way, these have to be paid the next 12 months. So when you add their debt plus medical claims, it's about the same with their cash plus investments, 8.4 billion. And they are also required to keep more cash on their balance sheet to respect the regulation, as they operate in this healthcare insurance field. So, going forward, I expect a rebound for this company, Molina. If you are not patient enough to wait, as I said, 3 to 5 years, then don't invest in this company. It's not a quick rebound in the next week, next 2 months. No, that won't happen so soon. You have to wait at least some years to see a double. And this is the return you can get. 2x. I expect a 2x. There are high chances. And even more than this, if you are lucky. They improve their operations, they grow more, and improve their revenue. So that's it for this video. And if you want better investment ideas, undervalued, great companies, where you also get a dividend, not only buybacks, get a dividend plus buybacks, and also more than 2x, simply go to my profile, press join, and choose Titan Investor. And there you have access to my portfolio, plus an investing course, and other in-depth analysis. Your request, I'll make a new video for you. And bonus, access to the previous levels, Spartan and Gladiator. So, see you there.